Alright guys, so we're discussing questions on valuation of bond beta. There was one homework question given. Are we all done with it? क्या था बेटा question number 16th one guys. It says based on credit ratings Z has decided to apply the following discount rates for valuing the bonds. If it's a AAA rated bond, you will want 364-day treasury bill rate plus 3% spread. Spread beta is the difference between two different categories of bonds. Just say right now beta AAA rated bonds have a spread of about 0.3%. So when we say they have a spread of 0.3%, the yield that you're getting from a AAA rated bond beta is 0.3% more than government bond of a similar maturity. Are we clear? So यहाँ पे बेटा AA rated bond guys is AAA rated bond plus 2% spread. A rated bond beta is AAA plus 3% spread. Right now they're asking us to assume the treasury bill rate to be 9%. So AAA rated bond ka beta required return will become 9% plus 3%. How much will that be? 12%. This will be the required rate of return guys that you would want from a AAA rated bond. A AA rated bond guys will become 12% plus 2%. That will be 14%. The A rated bond beta will be 12 plus 3%, that is 15%. So these are the yields beta that you're going to generate. He's considering to invest in a AA rated bond, face value 1000 rupees. The bond is currently selling at 1025.86. This bond has 5 years to mature and the coupon rate is 15% per annum payable annually. The next interest is due 1 year from today and the bond is redeemable at par. You do not have to mention this beta that the next interest is due 1 year from today. By default guys, I told you basics of valuation mein. Whenever we are valuing any security guys, we consider cash flows only from the next year. Do you value security on a come interest basis or ex interest basis? Ex interest basis. The bond is redeemable at par. You're required to calculate intrinsic value of this bond and then determine whether we should invest in this bond or not. So you're supposed to discount all the cash flows beta at a required rate of 14%. What is your coupon rate guys? 15%. So your cash flows is साथ beta every year. Question number क्या था ये? The present value guys, that is intrinsic value of the bond, will be 150 rupees multiplied by present value annuity factor at 14% for how many years? 5 years. Plus beta redemption value is 1000 multiplied by a present value factor guys at 14% for the 5th year. This will give us the intrinsic value of the bond. How much is this? 1034.33. Current market price beta, is it less or more than the fair value? Market price is less than fair value. Because the market price is less than fair value beta, is it undervalued or overvalued? It is undervalued. Will you be buying the bond? Yes, the bond should be purchased. Are we clear about this? They've also asked us to compute YTM. How much did you get beta Ankit? What's the YTM? 150 beta. You can use the shortcut method. Redemption value is 150 है ना coupon. 1000 minus 1025.86 divided by 5 years whole divided by 1000 plus 1025.86 divided by 2. 14.29. 298, that is 14.30%. So the required rate of return is 14%, while the actual return that we are generating on the bond beta is 14.3%. Are we not generating a higher return? That is why again beta the bond should be purchased. Are we clear about this? Next beta, what is the last question that we did? बीच में 10th वाला नहीं हुआ है ना? हाँ? Okay, let's start. 10th question guys. We are still solving questions only on computation of fair value or intrinsic value guys. You just have to discount all the future cash flows. Mr. X wants to invest rupees 1 lakh in 7 years, 8% bond in the market, face value 100, which were issued 2 years ago. The total maturity of the bond beta is 7 years. The bonds were issued 2 years ago. So what is going to be the remaining maturity of these bonds? 5 years. You are requested to advise him what is the maximum price for bonds to be paid in the following scenarios. If he's expecting a return of 9%, if he's expecting a return of 7%, if the present rate on similar bonds issued is 8.25%, and if the present rate on similar bonds beta is 7.75%, basically 4 बार discount करना है बेटा. You will have to arrive at the present value or fair value under all the 5 cases. 4 cases. Can we write the given details first? हो गया ये? कर लिया बोल रहा तो या कर शुरू करेंगे. Write the given details बेटा. Face value of each bond is 100 rupees. Coupon rate is 8%. ये 9th है ना? 10th. Face value of each bond beta is 100. Coupon rate is 9%, 8%. Total maturity beta was 7 years. Remaining maturity is 5 years. Your coupon rate is 8%, total maturity 7 years, remaining maturity 5 years. You will have to use these details better to arrive at the value of the bond. Yes, kids. First case beta, what is the required rate of return? Required return beta is 9%. Maximum price that can be paid, guys. You will have to discount all the future cash flows at a rate of 9%. So that is 8 rupees multiplied by PVAF at what price? 9% for 5 years. After that, but I'll have to discount the redemption value at 9% for the 5th year. You're going to get 8 rupees every year for the next 5 years. You're going to get 100 rupees only once, but at the end of 5th year. How much will be the value, guys? 90? 96.44? 11. The price of each bond beta will be 96.11. Do not forget he has to invest a total amount of how much? 1 lakh rupees. Material नहीं बेटा, prevailing interest rate itself is your required rate of return, no? Yeah. So if the prevailing rate is 8.25%, beta, won't you also be expecting 8.25%? Simple. Directly discount cash flows at 8.25%. Yes, guys. क्या हुआ केशव? What's the doubt? Total amount is 1 lakh, beta. Price of each bond, if you write 96.11, that is sufficient. So if he's buying, say, 1000 bonds, he will pay 96,110 rupees. But then instead of buying 90, instead of investing only 96,110, you can also invest the entire 1 lakh. If you have 1 lakh rupees available with you, won't you want to invest the entire 1 lakh? Ardhamain kada? If you end up multiplying beta by 1000 bonds, that is 1 lakh divided by 100 rupees, then you will invest a lesser amount. You will not invest the entire 1 lakh. So the price of each bond beta is 96.11. Second case mein beta required return is how much? Required return is 7%. What is the maximum price, guys? Maximum price beta will become same thing beta. You'll have to now discount at 7%. 8 rupees into PVAF at 7% for 5 years plus 100 rupees multiplied by present value factor at 7% for the 5th year. 104.1. 104.1 beta will be the present value or the fair value of the bond if the required rate of return is 7%. You understood, Kaushik? Now, like in this way, you cannot say that we will put 1,04,100 rupees. Because do you have so much money available? The total amount available for investment is only 1 lakh rupees. Next, beta. If the required return is 8.25%, what will be the price? The prevailing return, guys, prevailing yield itself will be your required rate of return. So what is the maximum price that you will be willing to pay? 99.008, 008 or 99.01. At a discounting rate of 8.25%, the maximum price that we will be willing to pay beta is 99.01 or 008 rupees. हो गया प्रणव? Last वाला भी हो गया 7.75%. One more case beta there, which is 7.75%. Discount all the cash flows at 7.75%. If the required return is 7.75%, the maximum price beta again would be 101. Exact 101. The maximum price at a return of 7.75% beta is 101 rupee. Are we all clear about this? क्या लिख रही है नंदिनी? इतना बड़ा सबका हो गया बेटा ये 4 bits. Next bit beta, if the bonds are available at par and 1% is the transaction cost, what is the effective yield? If the bonds are available at par and 1% is the transaction cost, what will be your effective yield? कितना है निमित effective yield? 7 point. You will have to take purchase price as 101 rupee. Redemption value is 100. Coupon amount is 8 rupees. Effective yield. Here beta, what is the yield that we compute? YTM. All that you have to do beta is simply compute YTM. Obviously, we are assuming that you're going to hold the bond beta till the end of its maturity period. So if you're holding it till the end of its maturity period as such beta, your effective yield as such guys will be YTM. The purchase price of the bond guys will become 100 rupees plus 1 rupee 1% beta, that is 1 rupee transaction cost. So that will become 101. This will be your purchase price. Redemption value unless otherwise given is always at par, but a coupon amount we already know is 8 rupees. Total maturity period is 5 years. Your YTM guys, which is your effective yield. Guys, yield matlab return beta. यहाँ पे the only return that we compute from a bond is nothing but YTM. So YTM guys would be interest plus redemption value minus purchase price by n whole divided by redemption value plus purchase price by 2. This is what you're supposed to do guys in order to arrive at YTM. 8 rupees plus redemption value 100, purchase price 101 divided by 5 whole divided by 100 plus 101 by 2. 7.8 divided by 100.5. Correctly लिखा ना? 1 by 5.2, 8 minus that beta. So what is the effective return? 7.76. The effective return that we will be generating beta is 7.761%. Transaction cost is brokerage bet on your purchases today. Primary market transactions, anything with the company, there will not be any brokerages or expenses. Only on secondary market transactions you will have brokerages. Are we all clear about this? Last bit better. Find the number of days required to break even transaction cost if the bonds are available at par and 2% is the transaction cost. Bonds are trading at par value, that is 100 rupees. You will be incurring a transaction cost bit of 2%, that is 2 rupees. You will have to find out in how many days are you going to break even. Purchase price better, because the bonds are trading at par. Purchase price itself is your par value 2%. If purchase price was 105 rupees, transaction cost would have been as a percentage of 105. If purchase price is 110, it is as a percentage of 110. यहाँ पे बेटा purchase price is at par, but we are still incurring a transaction cost of 2%. We will have to find out how many days would be required to break even. आया आंसर कुछ? 92 days आ रहा है. तेरे को कितना है? हाँ? तू जो कॉन्फिडेंस से देखता ना मेरे को. Yes kids. Poonam, how much did you get? 92 days only. 91.25 to be specific. So you're on it. Alright guys, 91.25 is the right answer. Your annual coupon amount is how much guys? 8 rupees. You will have to recover. Break even matlab you have to recover your transaction cost as such beta. The transaction cost is 2 rupees. In how many days will you be recovering a coupon of 2 rupees beta if your annual income is 8 rupees? You are generating 8 rupees over 365 days. To recover that 2 rupees proportionately beta, you will write 365. So 8 rupees is sath beta. 365 guys into 2 divided by 8. That will give us the number of days required beta to break even. Our job is to recover only that 2% transaction cost. That is the additional amount that we are recovering guys. Once we recover that, there will not be any other loss on it. So to recover that, we will have to hold the bond for at least 91 days. Are we clear about this? Likho beta. Write down guys. If you are incurring, हाँ actual return कब होगा? अभी अपन को सिर्फ break even compute करना है. Our actual return is going to reduce, Break even is you are not making any return at all. To recover all your expenses, for how many days are you supposed to hold it? So if you sell the bond after 91 days, your net return is still 0 rupees. You haven't generated anything at all. Are we clear, guys? Likho beta. Transaction cost. Transaction cost is 2% of purchase price. 2% of purchase price. 2% of purchase price, that is 2 rupees. 2% of purchase price, that is 2 rupees. In order to break even, in order to break even, in order to break even, we should recover. In order to break even, we should recover the cost of 2 rupees. In order to break even, we should recover the cost of 2 rupees. By holding the bond, annual coupon amount realized will be 8 rupees. Annual coupon amount realized will be 8 rupees. By holding the bond, annual coupon amount realized will be 8 rupees. 8 rupees. So to recover 2 rupees, number of days required will be, to recover 2 rupees, the number of days required will be, 3, kitna beta? 365 days divided by 8 rupees into 2 rupees. 365 rupees divided by 8 days into 2 days. 8 divided by 8 rupees into 2 rupees. नहीं आएगा बेटा. Break even में यहाँ पे you will not consider any time value component. They haven't even given us the actual return and all of that aside beta. Are we clear, guys? See guys, if you consider time value of money, do not forget guys that the coupon rate is 8%, and if your YTM is also 8%, then there is anyways no additional return that you're going to generate. Will there be any additional after recovering that minimum return of 8% as such beta, will there be any additional return that you would be generating? No. Are we clear about this? अगर bond discount में होता बेटा, it would make a difference, because by selling the bond you may get a higher price on a later date. So we will also have to check at what point will you be able to recover that. His doubt beta is, what if the bond is trading at 90 rupees today and you are incurring some transaction cost? Do not forget, if the bond is trading at 90 rupees today, we have learned one thing yesterday, that over the maturity of the bond as such guys, what is going to happen to the price of the bond? It will gradually increase and reach its redemption value. If it is trading at a premium, it will gradually decrease and reach its redemption value. And those points are going to make a difference guys, but then they're not going to question all of that guys. Okay, that calculation as such beta will become complex. समझ में आया नहीं आया? Now guys, question number 11th and 12th are done. 13th one guys. Question number 13. ABC has the following outstanding bonds. Series X has a fixed coupon of 8%, matures in 10 years. Series Y is variable, changes annually comparable to prevailing rate. So Series Y is a floating rate bond. The amount of interest that you're going to generate on that does not remain fixed. It will depend on the prevailing interest rates. If the prevailing interest rate is 10%, you will get a coupon of 10%. If the prevailing interest rate is 9%, you will get a coupon of 9%, and so on. Are we clear? Initially, these bonds were issued at face value of 10,000 with yield to maturity of 8%. Assuming that after 2 years from the date of issue, interest on comparable bonds is 10%, then what should be the price of each bond? Initially, beta coupon rate and YTM were same. That is why the bonds were directly issued at par value. Hi Anna. Did we learn this also yesterday? If coupon rate is equal to YTM, guys, then what do you think should happen to the price of the bond? The bond should be trading at par value. If coupon rate is more and required return is less, then bond should be trading at a premium because you're getting a higher coupon. But what if coupon rate is less and required return is more? The bond will be trading at a discount. So now here, guys, it is not required, but just for your understanding, initially your YTM is 8% and coupon rate is also 8%. That is why the bond was directly issued at par value, face value. Correct, kids? Now, after 2 years, matlab, what will be the remaining maturity period? Remaining maturity period is 8 years. Interest on comparable bonds is 10%. What will this become? Required rate of return. Whatever is the prevailing market interest rate, guys, that itself will be your required rate of return. So your required rate of return is 10%. What should be the price of each bond? You have to compute the price of Series X and Series Y. Series X ka bond value beta will reduce. It will now start trading at a discount. Why? It is giving us a coupon of only 8%, but the required rate of return is 10%. Because you're generating a lesser return, guys, in the form of coupon, the bond will now be trading at a discount. Is that clear, guys? But Series Y bond, guys, what do you think will be the coupon rate that you will consider for Series Y bond? If the prevailing interest rate is 10%, Series Y ka coupon rate also should be 10%. Because coupon rate is 10% and your discounting rate is also 10%, Series Y bond will still be trading at par value. Are we clear? Kuch nahi hai beta. This is just to understand when will bond trade at a premium, when will bond trade at a discount. That is the conclusion. We have already learned that in the form of a concept yesterday. Correct? Can we first arrive at the value of Series X bond in both the cases? Series Y will always trade at fair par value because the coupon rate will exactly match with the prevailing interest rate of return, required rate of return. Online students, I hope that is clear. But question 13. First, we will value Series X. This is a fixed coupon bond. डाउट है कुछ? पक्का? क्या सोच रहा है यार इतना फिर? Face value beta I think is 10,000, no? Face value is 10,000. Issued at par. Maturity 10 years. Coupon rate was 8%. YTM is 8%. Face value 10,000, issued at par, maturity is 10 years, coupon rate 8%, YTMS 8%. Two cases here, beta. One is after 2 years, the other one is after 2 additional years. After 2 years, beta, what will be the remaining maturity? Remaining maturity of the bonds, beta, will be 8 years. But what is your required return now? It is not 8%, it is 10%. So the fair value, guys, will be, you will have to discount all the future cash flows at a return of 10%. So that beta would be 800 rupees multiplied by PVAF at 10% to be discounted for 8 years plus 10,000 into present value factor at 10% for the 8th year. అయిందా ఎంత వచ్చింది ఇది అచ్చా డైరెక్ట్లీ రైట్ వన్ లైన్ నో fair value beta is 8,933.01. The bond will now be trading at a discount. Same calculation beta for the second bit. Let's finish series X calculation. After 2 additional years, the remaining maturity of the bonds beta will become 6 years. Remaining maturity, guys, is 6 years. Your required return, guys, is how much? 7%. If the required return is 7%, then what do you think will be the fair value of this bond? 800 multiplied by PVAF at 7% beta for 6 years plus 10,000 multiplied by present value factor at 7% for the 6th year. 10,000 476 point 10,476.65 will be the value of the bond. Are we clear about this? Series Y kuda in there. We know 10,000 10,000 तो भी ऐसे ही लिखती पूनम one line answers. First bit beta it is 8,933, second bit 10,476. क्यों नहीं रहते बेटा वेरिएबल रेट बॉन्ड्स हाँ not necessary guys that the value of the bond should be exactly equal to the prevailing yield. There can be other factors जैसे inflation linked bonds are very common bonds that prevail in Indian markets में नहीं है US markets में very common. The rate that you will get on these bonds is directly equal to whatever is the inflation rate plus a real return of about 1.5%. All your housing interest rate loans are variable only, no? Repo plus whatever is the spread. Are we all clear about this, guys? Next beta is series Y. Series Y beta is floating rate bond. Coupon rate, guys, will be equal to prevailing interest rates. Coupon rate beta will be prevailing interest rate. Face value of each bond is 10,000 rupees. Each bond has a face value of 10,000. Coupon rate is equal to your prevailing interest rate, guys. इसका भी maturity कितना है? 10 years. You still have to show the calculation beta. You cannot directly write we know it is 10,000. एग्जाम में वो लोग बोलते हैं वी नो दैट यू नो बट वी विल नॉट गिव यू मार्क्स बोल के. आफ्टर 2 years guys, prevailing rate is how much? Prevailing rate is 10% guys, so coupon rate also will become 10%. Remaining maturity beta is 8 years. You will have to show the calculation guys, and only after that you're supposed to write conclusions. Not write conclusion first. Fair value beta will be equal to 1,000 rupees multiplied by PVAF at 10% for 8 years plus 10,000 into present value factor at 10% for the 8th year, We're taking a coupon of 1000 rupees, guys, because your prevailing interest rate is also 10%. So 1000 multiplied by PBAF at 10% for 8 years, 10,000 into present value factor. You will come back better to a value of 10,000 rupees only. You're discounting and compounding at the same rate, so you should come back to the same rate better. Second bit, guys, after 2 additional years, what will you take prevailing rate as better? Prevailing rate, guys, is 7%. Coupon rate also will be 7%. Maturity beta now will only be 6 years. Maturity will be 6 years. So your fair value of the bond, guys, will become 700 multiplied by PVAF at 7% for 6 years plus 10,000 rupees multiplied by present value factor at 7% beta for the 6th year. So that will be 10,000 rupees. Yes, beta. Are we all done with the calculation, guys? हो गया ये? Write the conclusion, guys. Third bit. Are you all done with these calculations? Write down, beta. If the coupon rate is equal to the required rate of return, if the coupon rate is equal to required rate of return, if the coupon rate is equal to required rate of return, the bond will always be trading at par value. The bond will always be trading at par value. The bond will always be trading at par value. At par value. Provided it is redeemable at par. Provided it is redeemable at par. Provided it is redeemable at par. Brackets में बेटा series Y bond. Series Y bond. Next. If coupon rate is less than the required rate of return, if coupon rate is less than the required rate of return, if coupon rate is less than the required rate of return, less than the required rate of return, the bond will be trading at a discount. The bond will be trading at a discount. The bond will be trading at a discount. And if coupon rate is more than the required rate of return, coupon rate is more than the required rate of return, more than the required rate of return, the bond will be trading at premium. If coupon rate is more than the required rate of return, the bond will be trading at a premium. Brackets में series X. Series X bond. Series X bond. Are we clear about this? Question number 14, guys. Pet Feed PLC has outstanding a high yield bond with the following features. Face value beta is £10,000. Coupon rate is 10%. Maturity period is 6 years. Special feature, company can extend the life of the bond to 12 years. Presently, the interest rate on equivalent bond is 8%. We are offering a coupon of 10%, guys. But the prevailing market interest rates are only 8%. The maturity of this bond is 6 years, but the company can extend the maturity by another 6 years, taking the total maturity to 12 years. If an investor expects that interest will be 8% 6 years from now, how much should he be paying for this bond now? You're expecting that the interest rates that are going to prevail after 6 years will remain at 8%. If the interest rate prevails at 8% only, guys, then what is the amount that you will be willing to pay for the bond? Question था ये 10,000 924.58. Did you take the maturity to be 6 years or did you take the maturity to be 12 years? एक बाकी के लोग एक सेकंड सोचो बेटा क्वेश्चन के बारे में. I'll wait for a minute. Please think about it and then tell me. Just one, let them process it. I'll wait for 30 seconds, but I'll let everyone process, and then after that, Niharika will answer first. Online students, you can also think but and type an answer. Should we consider the maturity to be 6 years or 12 years? That's the question. That's the only thing but important in this question. Baki pura normal hai. Chances of this question coming in the examination is very less. Ye 13th and 14th, both of them were from May 2011 RTP. After that, they've disappeared, but then they still have important points. Isliye I'm continuing the questions. Nakul, Rachit, Mukesh, Azaz, the ones who are attending online better. Should we take the maturity to be 6 or 12 years? हाँ बेटा हो गया टाइम बोलो. Let's start with Niharika. You said 6 or 12 years. You think 12. Is that your gut feeling or is it based on something? What the hell was that, beta? What are we supposed to pay now? It will all depend on present value of future cash flows. That future cash flows can be either based on a period of 6 years or it can be based on 12 years. There should be a logical reasoning. Why are we taking either 6 or 12? It cannot be like 12 is a much bigger figure. So that is why let's take 12. Be happy with it. Why should we take 6? Gupta ji, why 6 years? That's the answer. The company is going to redeem these bonds at the end of 6th year. If the prevailing interest rates continue to remain at 8%, why the hell will the company want to pay a coupon rate of 10%? it would be beneficial for them without dancing Harshit to redeem the existing bonds. नाच रहे क्या यार, मैं पढ़ा रहा हूँ क्लास में. To redeem the existing bonds better and issue new bonds at a lower coupon rate. That's the only reason why we should consider the maturity of the bond to be 6 years. But look at the second bit, guys. Now suppose on the basis of that expectation, you assume better that the interest rates will remain at 8%, and that is why as such better you considered the maturity of the bonds to be only 6 years. Second bit क्या बोल रहा है? You have invested in this bond, but 6 years later the interest rate actually turns out to be 12%. Now, will the company want to extend the maturity of the existing bonds, or will they issue new bonds with a higher coupon rate? Extend the maturity. Are we clear, guys? So after 6 years, the remaining maturity beta will become 6 more years. Do not take total maturity as 12 years for the second bit, because it is after 6 years from the current date as such, guys. So that means the remaining maturity should only be, if your expectation would have been correct, you would have got the entire 10,000 pounds from the company. Wouldn't the company give you back the face value, redemption value, but after redeeming the bonds? But the company is not going to redeem the bonds now. The company is going to extend the maturity of the bonds better by 6 more years. This is the only point of the question, guys. Understood or no? ठीक है बेटा, लिखो first bit. Let's write the answer to the first bit, guys. Nakshatra says 6 years. Yes, beta, Nakshatra, correct. क्या बोल रहा था बेटा मैं? हाँ, first bit. The coupon rate of the existing bonds. The coupon rate of the existing bonds. The coupon rate of the existing bonds. Existing bonds is 10%. Is 10%. If the prevailing interest rate, if the prevailing interest rate, if the prevailing interest rate, if the prevailing interest rate continues to be, if the prevailing interest rate continues to be 8%, if the prevailing interest rate continues to be 8%, the company will not extend the maturity of the bonds to 12 years. The company will not extend the maturity of the bonds to 12 years. Company will not extend the maturity of the bonds to 12 years. It can redeem the existing bonds at the end of 6th year. It can redeem the existing bonds at the end of 6th year. It can redeem the existing bonds at the end of 6th year. Redeem the existing bonds at the end of 6th year. And issue new bonds. Redeem the existing bonds at the end of 6th year and issue new bonds. Issue new bonds at a lower coupon rate. At a lower coupon rate. Hence, for valuation, we will only consider a period of 6 years. Hence, for valuation, we will only consider a period of 6 years. For valuation, we will only consider a period of 6 years. Can we now arrive at the value of the bond beta based on this? Face value is 10,000 pounds. Coupon rate is 10%. So your coupon amount beta would be 1,000 pounds. Maturity of these bonds beta is 6 years. Face value 10,000, coupon rate 10%, coupon amount is 1,000 pounds. Maturity beta is 6 years. Required return beta, prevailing rate कितना है? 8%. What will be the fair value of the bond? The maximum price that you will be willing to pay beta is £1,000 multiplied by PVAF at 8% for 6 years plus £10,000 multiplied by present value factor at 8% for the 6th year. बोल बेटा कितना है? 10,924.5658. This will be the value that you will be willing to pay for the bond, guys. You will be paying 10,924.58. Every year you will receive £1,000. At the end of 6th year, you will be expected to receive £10,000. At the end of 6th year, you will receive £10,000. Are we all done with this? Yes or no, beta? Kya doubt hai, Yasha? Second bit, guys. I'll dictate. 6 years later. 6 years later. 6 years later. The actual interest rate. 6 years later. The actual interest rate is 12%. Is 12%. 6 years later, the actual interest rate is 12%. The company will want to extend. The company will want to extend. The company will want to extend the maturity of the bonds by another 6 years. The company will want to extend the maturity of the bonds by another 6 years. The company will want to extend the maturity of the bonds by another 6 years. As the coupon rate is only 10%, as the coupon rate is only 10%, and if new bonds are issued, if new bonds are issued, it will have to offer a coupon of 12%. It will have a coupon of 12%. Now, you will have to value the bond, guys, for the second bit. Remember, guys, we are not in T0. We are valuing the bond as on what date? T6. So, यहाँ पे बेटा, the remaining maturity will only be 6 years. Please do not consider remaining maturity beta to be 12 years. Remaining maturity beta is 6 years. Required return as of now beta will be 12%. Your coupon rate and everything is still fixed. You will have to discount beta and arrive at the fair value. He might want to sell off the bond now. You invested in the bond with thinking that you will remain invested only for a period of 6 years. What if you actually need cash at the end of 6th year and you want to encash it? You will not fetch the entire £10,000 now. पैसे कम आएंगे. Fair value, guys, will be £1,000 multiplied by PVAF at 12% for 6 years plus £10,000 multiplied by present value factor, guys, at 12% for the 6th year. It's 1,000 into this, 9,000. 9,177.72, guys, is the value that he will fetch in case he wants to sell the bond in the market. Agar company redeem karti beta, you would have got an amount of how much? 10,000. If the company was redeeming the bonds, you would have got the entire 10,000. Company would have redeemed the bonds at par value. Company would have redeemed the bonds but at par value. So if the company was actually redeeming the bonds, it would have given you 10,000 pounds. But now by selling the bond, you will only get 9,177.72. Are we clear about this? Question number 15, guys. 1-5. Compare the effective annual interest rate of the following two securities. There's a 3-month treasury bill, face value 1,000, currently selling at 973. Guys, any money market instrument, guys, will have zero coupon rate. A 3 months treasury bill will not have any coupon. You directly issue them at discount and you redeem them at face value. So you're issuing the bonds at 973 rupees, you'll be redeeming the bond at a price of 1,000 rupees. You have to compute effective annual interest rate. Did we learn the concept of effective annual interest rate? Yes, beta. Try to figure it out, beta. I'll wait for a minute. Try to figure out the answer. Yes, guys. Keshav wants to answer. क्या बड़ा? You don't know. कान के नीचे लगा था. 14.67% in the first case. 9 point. Yes, better. 2.7465. That is your effective annual return. 11.09. तो सिर्फ एनुअलाइज कर दे रहा है बेटा, कंपाउंडिंग नहीं कर रहा है. The answer is 11.57%. You got 11.57. आया बेटा, देखो पद्मा, पूनम. Guys, you will have to first compute what is the return that you are generating, guys, for 3 months, and then you will have to compound it as such, guys, 4 times in a year, because the return that you are generating in the first case, beta, is only for 3 months. Pay attention, guys. You can copy later. We're talking about the first bit, beta, here. If your investment is 973, what will be your redemption value, guys, after 3 months? How much will you get? 1000 rupees. What will be your return, beta, in rupees for 3 months? Return in rupees, beta, for 3 months will be 27 rupees. On an investment of how much? On an investment of 973 rupees. You are investing 973 rupees today. You are going to fetch an amount of 1000 rupees after 3 months. So you're generating 27 on an investment of 973. What will be your return, guys, in percentage? For 3 months, beta, ye. Return in percentage for 3 months is 27 divided by 973, guys. You will get 2.775% or 49%. उतना ही आया ना, एक बार चेक करो. 2.775%, guys, or 2.7749%. This is the return that you're generating for a span of 3 months. Any doubt in this part? Yes or no, guys? Every 3 months, will you be able to generate a return like this? If the prices prevail at the current level only as such, better, you will be able to generate a return of 2.7749% every 3 months. Yes or no, guys? My effective annual return, guys, I will be generating this 2.7749% 4 times in a year. The formula is 1 plus r by m whole power m minus 1. Do you recall this? यहाँ पे r by m itself is 2.7749%. Please do not divide it by 4 again. Isn't that return exactly for 3 months? R by m is already 2.7749%, beta. You're going to directly compound it. Why did I write the value of m as 4? Because this is quarterly as such, beta. The number of conversion periods will be 4 in a year. So, so this, beta, will give us an effective return of how much? 11.5702%, beta, will be the value. बेटा YTM comes from multiple years. यहाँ पे है क्या क्या ठीक है, कैसे कर रही है YTM बोल. Guys, for a zero coupon bond or a non-coupon paying bond as such, beta, you will not use those shortcut formulas. You will directly arrive at answers like this. You can use present value technique for computing YTM. You will still get 2.7749% for 3 months. एक बार वो आया, you have to again compound it 4 times in a year to compute your effective annual return. तो सिर्फ into 4 किया बेटा, that was the only difference, right? तो 2.7749 तेको आ चुका था, you multiply that by 4 times, 12 by 3. You just have to compound it, guys, and do not. The requirement is to compute effective annual return, so that will be after compounding. ऐसे नहीं भी करना है बेटा. Assume some investment. No, say what if you invest 10,000 rupees? Won't you keep getting that 2.7749% 4 times in a year? Compute your accumulated balance and compute what is the return that you have generated. Is that clear, kids? Make a note बेटा now. हाँ हाँ, ये फॉर्मूला यूज नहीं करना है तो वो लिख सकता है बेटा, नो प्रॉब्लम एट ऑल. तो वही किया ना अभी. Investment is 973, redemption value 1000 rupees. Every 3 months compound होते रहता है अमाउंट. फिर लास्ट में फाइनल जो भी पूरा ईयर का इंटरेस्ट आ रहा है डिवाइडेड बाय 10,000 करना, यू विल एग्जैक्टली गेट 11.57%. Once you're done copying this, try to figure out the answer to the next question. 15th question, B bit. हो गया ये? सेकेंड बिट भी आ गया आंसर. कितना है देखो. All right, beta. Correct, Nakshatra. 10.25%. The answer to the second bit, guys, is 10.25%. Which is the rate that you're compounding, guys? So, are we directly picking up coupon rate of 10% beta, which is payable half yearly, and then dividing it by 2? No. लक है बेटा अपना सबका आंसर सेम है बोल के. हाँ. Because the bond is trading at par, YTM equals coupon rate. Coupon rate is not the return that you're supposed to compound, guys. It is YTM that you're supposed to compute. Because the coupon rate is 10% payable half yearly, YTM also will be 10% per annum compounded half yearly. Only because the bond is trading at par value. If the bond was not trading at par, guys, YTM wouldn't have been equal to coupon rate. If the bond was trading at 9,000 rupees or 8,500 as such better, we will have to first arrive at YTM. That will tell us what is the effective annual return that we're supposed to generate. You cannot directly compound coupon rate. Are we understanding this? Yes or no, guys? Likho beta. Write this note clearly. Effective annual interest rate. Effective annual interest rate. Effective annual interest rate should be based on the actual return generated. Should be based on the actual return generated. Actual return generated, which may or may not be equal to coupon rate. Which may or may not be equal to coupon rate. Which may or may not be equal to coupon rate. May or may not be equal to coupon rate. In the given case, as the bond is trading at par, in the given case, as the bond is trading at par value, as the bond is trading at par value, as the bond is trading at par value, YTM will be equal to coupon rate. YTM will be equal to coupon rate. As the bond is trading at par value, YTM will be equal to coupon rate. Coupon rate. Therefore, YTM is 10% payable half yearly. YTM is 10% payable half yearly. YTM beta will be 10% payable half yearly. So what will be your effective annual return, guys? इसको भी compound करना है ना बेटा अभी. Effective annual return, guys, will be equal to 1 plus. You know that your YTM is 10%, guys. 1 plus 0.1 by how much? 2 whole power 2 minus 1. याद रखना YTM is 10% per annum, not for 6 months. And compounding period is 2. So this will be 1.05 whole power 2 minus 1 beta. You're effectively going to get a return of 10.25%. They can ask questions like this beta in MCQs. 10.25% beta will be your effective annual return. Doubt है सौरभ? तुम लोग आंसर 10.25 है only because YTM is also equal to coupon rate. अगर YTM नहीं रहता, say if you would have got a YTM of 12%, that would have been 12% compounded half yearly. I would have taken 1 plus 0.12 divided by 2 whole power 2 and not 1 plus 0.1. How do we determine YTM? Say beta your bond is trading at a value of 9,000 beta, it is redeemable at 10,000, coupon rate is 10%, maturity period is 5 years, payable half yearly. ठीक है? So यहाँ पे बेटा I will directly write interest amount will be 1,000 plus 10,000 minus 9,000 divided by, you can either write 5 years or you can also write 10 semi-annual periods. Whole divided by, so here I'll make it coupon as 500. Whole divided by 10,000 plus 9,000 divided by 2. ये जो भी YTM आएगा देखो, that is for how many months? 6 months. Use this to compute your effective annual return. Got it? If coupon rate beta is not equal to YTM, you're first supposed to compute YTM. Once we compute, ये भी आएगा बेटा आगे. We have another question in which we'll have to compute YTM where the coupon payments are payable half yearly. So I will tell you how to compute effective annual return there. In the first bit, ये जो कर रहे हैं अपन, हाँ उसमें directly we got accurate return for 3 months. So we calculated YTM for those 3 months period and then we compounded it 4 times. यहाँ पे we are calculating what is the YTM for 6 months and then we'll compound it. So if coupon rate guys and YTM are not equal, your job is to first compute YTM. Only that amount you're going to compound better to arrive at effective annual return. Is that clear, kids? Yeah, this is already R by 2 for 6 months. So उसको ही directly compound करेगा whole power 2 minus 1. Is that clear बेटा? Any doubt in this, kids? लिखना है बेटा example ये. Let's write guys नीचे example. I'll dictate. ठीक से लिखेंगे. If coupon rate and YTM are not, पूरा लिखा रहा हूँ मैं वही. Write down guys. Note बोल के लिख लेना या फिर example. If coupon rate and YTM are not equal. If coupon rate and YTM are not equal. If coupon rate and YTM are not equal, we should first compute if coupon rate and YTM are not equal, we should first compute YTM. We should first compute YTM. Current market price 9,000. Current market price 9,000. Current market price 9,000 rupees. Face value 10. Chances of such questions being asked in the examination are negligible, guys. Let us not forget. Most of the questions that come in the examination are simply a copy of the existing questions. They only change figures as such, guys. These days नया trend November 24 as such बेटा, they wanted to change the language of every question. एक एक sentence change करना है जिससे थोड़ा बहुत answer change हो. They didn't want students to, because अब बच्चों का क्या बेटा, picture memory. We did the same question in class बोल के, this is how we're supposed to do it. But then they change one sentence in every question as such, guys, or change the way how they give the information, so that you'll have to use your brain to figure out that as such better first. Not complicated, but then you should still know how to figure it out. That is how they're asking questions, guys, abhi lately. And they should do that as such, guys. Instead of giving the same questions again and again बेटा, मतलब फिर वो मजाक हो जाता कि 90 कितना आ रहा होता, वो 95 96 95 96 बोल के, जैसे CBSE बोर्ड्स में कैसे आते हैं. ऑल राइट, हमारा होने दो सर, उसके बाद में लेट देम डू ऑल ऑफ दिस. क्या लिखे बेटा, फेस करंट मार्केट प्राइस 9000, फेस वैल्यू 10,000 रुपीज, कूपन 10%, पेएबल सेमी एनुअली, कूपन 10% पेएबल सेमी एनुअली, मैच्योरिटी पीरियड 4 years. कूपन 10% पेएबल सेमी एनुअली, मैच्योरिटी पीरियड 4 years. अब YTM फॉर 6 months कितना हो जाएगा बेटा, YTM for 6 months. Semi-annual coupon beta is 500 plus 10,000 minus 9,000 divided by how many semi-annual periods? 8 semi-annual periods. Whole divided by 10,000 plus 9,000 divided by 2. So that's 625 divided by 9,500. 6.579. This is for 6 months or per annum? This is for 6 months. What will be your effective annual return? Smart boy. 1 plus 0.06579 whole power 2 minus 1. 13.59%. This will become the effective annual return that you will be generating in this case. समझ में आया नहीं आएगा इस? अभी clear kids? Next beta, question number 17. After that we'll start a new concept. 17th question, guys. Mr. X purchases a 5-year 8.5% bond for a price of 907.6 rupees, face value 1000, that has a YTM of 11%. You are required to compute reinvested interest amount on this bond. I've explained all of these concepts already, guys. Think about it. Reinvestment at answer बोलो final. Yes, beta. You're supposed to arrive at the amount of reinvestment income using these details. हाँ 1 point. बेटा 5 साल का कैलकुलेशन करना है तो इतना जल्दी कैसे मार दिया? We will have to calculate the entire amount as such beta for a period of 5 years. नहीं किया तो reinvestment income वाला part. If you would want to refer something, it's in your concept book beta. We've computed reinvestment income. I've covered वो ऐसा टेबल बना दिया था एक, हाँ बेशरम देखो वो ऐसा टेबल बनाना है क्या कहते हैं. Online students, I'm waiting, guys. You can try to figure out the answer. Online students, yes, beta 104.36 is the right answer. So, guys, what are we supposed to do better here is reinvest all the cash flows at YTM. If our YTM beta is 11%, obviously it assumes beta that all the reinvestments will be made at a return of 11%. What are the cash flows that you are going to fetch beta out of this bond every year? We will be getting a cash flow of 85 rupees. Hi, Anna, guys. पहले वो नोट लिखो guys. Write a note guys that if YTM is 11%, if YTM is 11%, beta, all the cash flows will be reinvested at if YTM is 11%, all the cash flows will be reinvested at 11%. Will be reinvested at 11%. This is an 8.5% bond, beta. Face value कितना ये bond का? 1000 rupees. So your annual coupon guys will become 85 rupees. Whenever they ask us to compute reinvestment income, you will have to compute accumulated balance guys. That is the only way of getting the answer. Our cash flow in the first year beta is 85 rupees. If I reinvest at 11%, what will be my accumulated balance? It will be 85 into 1.11 whole power 4. You will be able to reinvest this only for a period of 4 years. The second 85 that you're getting in the second year beta, you will be able to reinvest this for a period of how many years? 3 years. 1.11 whole power 3. The third one beta 85 into 1.11 whole power 2. Next beta 85 into 1.11. Last में beta you will get 1000 rupees plus 85. On this there will not be any reinvestment income because this is already at the end of 5th year. समझ में आ रहा है नहीं आ रहा है? On the last 1085 you will not have any reinvestment income because this is directly at the end of 5th year. You will have to take the total of both the things beta. The difference will be your reinvestment income. Without any reinvestment guys, the total cash flows that you are getting is 1425. You will have to compute with reinvestment what is the total cash flow that you are generating guys, and then the differential amount will become your reinvestment income. Ardhamavutunda? Compound all the cash flows at the rate of 11% guys. How much is this total beta? Individual cash flows bolo. 85 into 1.11 whole power 4 is 129.035. Chalta. Next wala beta 85 into 1.11 whole cube 116.248. Next 85 into 1.11 whole square 72. Next 85 into 1.11. This is 1085. Add all of them guys. 1529.36. The total accumulated balance after reinvesting cash flows beta will be 1529.36. Without reinvesting, your cash flow will only be 1425. The differential beta will be your reinvestment income 104.36. If you do not reinvest, you will not be able to effectively generate a return of 11%. That return of 11% beta is only contingent upon you being able to reinvest at 11%. Do you remember that I did 3 returns? What will be your actual return if you do not reinvest at all? What will be your actual return if you reinvest at cost of capital? That is nothing but MIRR. And what will be your actual return if reinvestments are made at IRR? यहाँ पे cost of capital आणि aim ఉండదు. If the prevailing interest rate is 11%, that itself is cost of capital. That itself is required rate of return. You will be able to reinvest at that rate. Are we clear about this, guys? Any doubt in this part? Chalta beta. Absolutely no problem. One bus loan likh lena. On the last amount, there will be no reinvestment as it is at the end of 5th year. Even if you show calculations beta only for the first 4 years, you'll get exactly the same amount. Last wale pe anyways, there is no reinvestment income. Sir, they're asking only reinvested interest amount. Why consider reinvestment value? Beta, when they say compute reinvested interest amount on this bond, they did not mean to compute ki interest kitna hai bolke. On that interest reinvested, what is the income that you are generating? If they're asking us to only check what is the amount that you're reinvesting beta, then the answer is 85 rupees every year. Why make calculations also? So when they say compute that beta, redemption value lene ki zarurat nahi hai beta, because anyways on that you can ignore it. It is at the end of 5th year. Are we all clear about this? आ गया बेटा आंसर. Now let's move back better to the concept book. New concept now. Concept book, guys. Shall we start, guys? All right, kids. So when it comes to investment in bonds, I told you they can either be risk on account of interest rate changes, or they can be default risk, which is called as your credit risk. Whenever you invest in any bond, there are two main categories of risk that can be there, beta. All of this can also come as a part of your MCQs. Pretty important. So bonds, guys, you either have default risk. Default risk is also known as credit risk. This is the risk that the entity as such, guys, might default. If they are defaulting as such, beta, obviously you will not be able to realize your cash flows. Won't that affect the valuations? Yes or no, guys? So that is credit risk, default risk. The other risk, beta, is on account of interest rate changes. Under that also, beta, we have two things called as price risk and reinvestment risk. Let us understand price risk and reinvestment risk, guys. There is nothing much that you can do about default risk, but we can try to mitigate the price risk and try to mitigate reinvestment risk. Reinvestment risk, guys, is whenever cash flows are realized during the period of the bond. You are not realizing the entire cash flow at once. You are realizing the cash flows in parts, better. The effective return that you are generating, I told you, will all depend on the rate at which you are making reinvestments. Iske pehle, beta, the question that we just did, we computed reinvestment income on a bond. We assume, beta, that if the YTM is 11%, all the reinvestments will be made at 11%. You will be able to effectively realize that return of 11% if and only if your reinvestments are being made at 11%. If you're not able to reinvest at 11% as such, beta, your return will not remain at 11%. What if, beta, you take all of those 85 rupees as such, guys, and just put it in your house? The accumulated balance will be how much? 1425 rupees. If your accumulated balance is 1425 rupees as such, beta, will your return be equal to 11%? If I equate 1425 to 1000 rupees, guys, and compute my return, it will be much lesser than 11%. Are you getting the point, guys? IRR का यही problem है, beta, that in case you're computing IRR of any investment, what is the problem there? We assume that reinvestments are made at IRR. Without that, you will not be able to effectively realize the return. Now imagine that the prevailing interest rates are 10%. You invested in a bond. Your YTM is also 10%. The prevailing interest rates are 10%. You invested in a bond as such, guys. So your YTM will be 10%. After you have invested in the bond, the interest rate reduces to 8%. Now, whatever interim cash flows that you are realizing as such, guys, will you be able to reinvest them at 10% or will you be able to reinvest them at 8%? 8% only. Won't your reinvestment income reduce? Can this affect the overall return that you're generating from the bond? I invested in a bond that is giving me an annual coupon of, say, beta, 100 rupees for the next 5 years. Plus, I will get my redemption value of 1000 at the end of 5th year. If the prevailing interest rates are 10%, I will be able to reinvest all the cash flows at what rate? 10%. If the prevailing interest rates comes down to 8%, I will be able to reinvest all of my cash flows at 8%. If the prevailing interest rates increases to 12%, I will be able to reinvest all of my cash flows at 12%. So there is a direct relationship between the prevailing interest rates and the amount of reinvestment income. It is favorable for you if the prevailing interest rate increases because you will be able to reinvest your cash flows at a higher rate. If the अपना reinvestment rate reduces as such, guys, then obviously our reinvestment income will reduce. Are we clear about this? So when they talk about reinvestment risk, what is the relationship between the income that you generate and the interest rates? Direct relationship, a positive relationship between reinvestment income and the interest rates. Are we getting this point? Yes or no, guys? On the other hand, ये समझ में आया reinvestment risk किसकी बात कर रहा हूँ मैं? Whatever effective return that you're going to generate will all depend on the prevailing interest rates. Imagine that I invested in a 10-year bond with a YTM of 12% better, but right now the prevailing interest rates are 8%. Whatever coupon amounts that I will realize from the company, will I be able to reinvest at 12% or will I be able to reinvest only at 8%? Will this affect my return? The answer is yes. इसी को बोलते हैं reinvestment risk. You do not want reinvestment risk. Invest in a bond that accumulates your cash flows. Zero coupon bond. If I invest in a zero coupon bond, guys, will I have any amount of reinvestment risk? Why? I am not realizing any cash flow during the maturity of the bond. I am realizing the cash flow entirely at once at the end of the maturity period. That is why beta there will not be any reinvestment risk here. Or invest in a debenture, guys, which gives you an option to accumulate the interest. Yeah, the first day I showed you beta certain bond ke values. I said whenever you're investing in a bond these days, they will give you an option. Do you want monthly interest? Do you want annual interest? Or do you want your interest to get accumulated? You can always select the option of cumulative interest. If you do that, will there be any reinvestment risk? No. But do not forget beta, accumulating interest can also result in a little higher amount of credit risk. If something goes wrong with the organization beta tomorrow, you're not only losing your principal portion, you're also losing on the entire interest that got accumulated till date. So that is one. Is that clear, guys? The other risk that we have in investment in bonds on account of interest rate changes is called as your price risk. I have spoken about this also earlier, but let us do it again, but in a detailed manner. In case you invest in a bond today, whose maturity period is 10 years, guys. Say face value of the bond is 10,000, maturity period is 10 years, coupon rate is 8%, YTM is also 8%. You are investing in this bond today, beta, the issue price or the purchase price as such, guys, is 10,000. You are buying the bond at par value. What if you want to sell this bond after 2 years when the remaining maturity is 8 years? You want to sell this bond after 2 years. You do not want to hold it till the maturity date. If you would want to sell the bond after 2 years, beta, when the remaining maturity is 8 years, the value that you are realizing, will that depend on the prevailing interest rates? If the YTM or if the prevailing interest rate at that point of time beta is 10%, the price of the bond will not remain at 10,000. The price of the bond might decrease. Yes or no, beta? Question number 13, beta, bond X का price बोलो कोई मेरे को first bit का. I picked up those values only. You will write 800 into PVAF at 10%, guys, for 8 years. Plus 10,000 multiplied by present value factor at 10% for the 8th year. 8,933. You invested 10,000 rupees in the bond today. In case you want to exit after 2 years, you're going to get only 8,933 rupees. Are you losing out here? Yes or no? Wouldn't your effective return beta be much lower than that original 8% that you calculated? When will you realize that 8% return beta? If you wouldn't have sold the bond now and if you're holding it till the end of its maturity period. Why beta, what if your YTM reduces, guys, to 6%? Wouldn't that be favorable? A decrease in interest rates will increase the value of the bond. An increase in interest rate will decrease the value of the bond. यहाँ पे there is an inverse relation. Reinvestment risk में there's a direct relation between interest rates and the income. But under price risk, there is an inverse relationship between the interest rates, guys, and the values of the bond. After you've made investments, if the interest rates have increased, price of the bond will decrease. After reinvestments, better, after you've invested, if the interest rates decrease, the price of the bond will increase. Is that clear? How can I avoid this price risk? By not selling the bond. Hold it till the end of its maturity period. Now, in case you are investing in a zero coupon bond for a period equal to its maturity period, अपना investment period guys is equal to maturity period, will I have any amount of reinvestment risk? Will there be any reinvestment risk by investing in a zero coupon bond for a period equal to its maturity period? No. Will there be any price risk? You do not want to take any risk in relation to interest rate changes. Invest in a zero coupon bond and hold it till its maturity period. You will not be bothered about prevailing interest rate changes in any manner. Doesn't matter whether the prevailing interest rates have reduced or whether they have increased. Your value beta will not get affected in any manner. Is that clear? What if you invest in a zero coupon bond for a period less than its maturity period? You still do not have reinvestment risk because you do not have to worry about reinvesting those interim cash flows. But then will you have price risk? Undoubtedly, yes. We will have price risk as such beta because you may have to, if the interest rates change, the value of the bond will change. If the value of the bond is changing, the price that we realize beta will change. Coupon paying bond guys. If I invest in a coupon paying bond for a period equal to its maturity period, what will happen? I will undoubtedly have reinvestment risk, but there will not be any. I do not have to worry about selling the bond in the market guys. I'm holding it till the end of its maturity period. So I will not have any price risk. I will only have reinvestment risk. But what if I invest in a coupon paying bond guys for a period less than its maturity period? Will I still have reinvestment risk? As long as you're realizing cash flows as such beta during the interim periods guys, there will be reinvestment risk. प्राइस रिस्क कब रहेगा गाइस? Because you're investing in this bond for a period less than its maturity period guys, you will also have price risk. So in the given case beta, we have both reinvestment risk as well as price risk. समझ में आ रहा है नहीं आ रहा है? This is to give you an idea about what is reinvestment risk, what is price risk. So if you are investing in a zero coupon bond as such beta for a period equal to its maturity period, we do not have reinvestment risk, we do not have price risk. If you are investing in a coupon paying bond for a period less than its maturity, you have both price risk as well as reinvestment risk. This is where beta there is a new concept that comes in called as interest immunization. How can I protect myself against interest rate changes? By investing in a zero coupon bond. The advantage here beta is that both the risk work in an opposite manner. Reinvestment risk has a direct relation with interest rate changes. Price risk has an inverse relation with interest rate changes. We will be able to offset our price risk with reinvestment risk. By investing in a bond for a period lesser than its maturity. What is that period? We will compute it. It is called as duration of a bond. Duration is not maturity period. Duration is that period guys wherein if you invest in a bond, you will be protected against interest rate changes. Any change in interest rate as such guys is not going to impact your effective realization. Price risk and reinvestment risk will offset each other. Are you trying to get the point better here? See, easier way, invest in a zero coupon bond. But that should exactly match with your investment period. Imagine that you have surplus funds for 5 years better. You should find a zero coupon bond that is exactly maturing at the end of 5th year. If you are able to do that better, well and good. Kaam khatam. You do not have to worry about price risk. You do not have to worry about reinvestment risk. But if you are not able to find a bond which is exactly maturing in a span of 5 years better, we will have to find a coupon paying bond whose duration is 5 years, not maturity period. If I invest in the bond for a period equal to its duration, I will be protected against price risk and Reinvestment risk. All of these questions but are very normal if you would want to get into banking industry. वहाँ पे बेटा there are lot of fixed income securities guys. They ask questions left, right and center on all of this. And textbook answers better straightforward are not accepted. They only check whether you are able to interpret the correct meaning or not. Are we clear about this? Yes or no beta? समझ में आ गया what is price risk, reinvestment risk? All of this beta was to introduce the next concept, that is duration of a bond. We will be doing questions on duration, modified duration and convexity, but for that you should know why are we even doing all of those concepts. Okay, anything that you invest as साथ बेटा in मतलब ये अपने AAA rated bonds or anything, they will always mention guys what is the average duration of a bond. यहाँ पे था क्या इसमें या नहीं? हाँ, जैसे guys यहाँ पे it says long term bonds as such guys, but then the average duration, macular duration beta is 8.14 years, 5.49 years, 3.58 years. If I invest in the bond beta for a period exactly equal to 3.58 years, I will be protected against both interest rate changes and price. Matlab, price risk and reinvestment risk. If you look at this beta, the average maturity of these bonds is 12.98 years. But the duration of that bond is 8.14 years. यहाँ पे बेटा the maturity of the bonds is 7.37 years, but the duration of those bonds is 5.49 years. Anyways, price risk and reinvestment risk, a relation is what we have to understand as of now as such beta. We will talk about how to compute duration and how that exactly helps us in protecting against interest rate changes. Any doubt in so far beta? Are we clear about price risk and reinvestment risk? Chalo guys, let's write notes. क्या हुआ बेटा? They will offset each other. That's the advantage. When I say they will offset each other, the negative impact of one beta will be offset by the favorable impact of the other factor. On account of reinvestment income, if I'm losing out, the price increase in the value of the bond will compensate for it. Yes guys, क्या लिखे बेटा साइडिंग? Price risk and reinvestment risk. अभी इसीलिए there's a formula to be computed बेटा. Only for that period it will have same impact. For any other period the impact will be different. So this is where we bring in the concept of duration. तो तू बोला करेक्ट है, प्राइस रिस्क की वजह से अगर सिर्फ 1% इम्पैक्ट आ रहा है लेकिन री इन्वेस्टमेंट की वजह से 3% जा रहा है, all possible. But if you invest for that period exactly, then it will offset. That is the whole concept here. So guys, price risk and reinvestment risk. देखो, investment in bonds is subject to two major risks. Investment in bonds is subject to two major risks: credit risk and interest rate risk. Credit risk and interest rate risk. Credit risk and interest rate risk. Interest rate risk. Credit risk is the risk of default. Credit risk is the risk of default. Credit risk is the risk of default. Risk of default. Next line. Interest rate risk is further segregated into. Interest rate risk is further segregated into. Interest rate risk is further segregated into. Price risk and reinvestment risk. Interest rate risk is further segregated into price risk and reinvestment risk. Interest rate risk is further segregated into price risk and reinvestment risk. Reinvestment risk. Next beta. YTM of a bond will be effectively realized. YTM of a bond will be effectively realized. YTM of a bond will be effectively realized only if YTM of a bond will be effectively realized only if all the interim cash flows are all the interim cash flows are all the interim cash flows are reinvested at the same rate. All the interim cash flows are reinvested at the same rate. At the same rate. All the interim cash flows are reinvested at the same rate. If the prevailing interest rate increases, that's an if the prevailing interest rate increases, if the prevailing interest rate increases, prevailing interest rate increases, reinvestments would be made at a higher rate. Reinvestments would be made at a higher rate. Reinvestments would be made at a higher rate. Reinvestments would be made at a higher rate, resulting in a higher reinvestment income. Reinvestments would be made at a higher rate, resulting in a higher reinvestment income. Resulting in a higher reinvestment income. Next line. Similarly, if the prevailing interest rates decrease, if the prevailing interest rate decreases, if the prevailing interest rate decreases, reinvestments would be made at a lower rate. If the prevailing interest rate decreases, reinvestments would be made at a lower rate, resulting in a lower reinvestment income. Resulting in a lower reinvestment income. Resulting in a lower reinvestment income. Next line. Hence, interest rate changes and reinvestment income. Interest rate changes and reinvestment income. And reinvestment income. Reinvestment income have a positive relationship. Have a positive relationship. Interest rate changes and reinvestment income have a positive relationship. Positive relationship. Next, guys. Next line. Price risk is the impact of price risk is the impact of price risk is the impact of interest rate changes interest rate changes on the price of a bond. Price risk is the impact of interest rate changes on the price of a bond. Impact of interest rate changes on the price of a bond. An increase in prevailing interest rates. An increase in prevailing interest rates. An increase in prevailing interest rates will result in a lower price. An increase in prevailing interest rates will result in a lower price. Will result in a lower price. समझ में आ रहा है? Increase in interest rates will result in a lower price. Hence, interest rate changes and price share an inverse relationship. Last 2-3 mock test papers से बेटा MCQ regularly has been only on bond valuation, testing all of these small points. Even if they give numericals as such, guys, it'll be one concept based, matlab theory based, nothing, nowhere related, wherein they're asking you to interpret these values. That's it. So hence interest rate changes and price of a bond share an inverse relation. Share an inverse relation. Share an inverse relation. Is this part clear, guys? Yes or no, better? Next. Copy this, guys. ये इन्वेस्टमेंट पीरियड है, ये समझ में आ जाएगा ना ऐसे? Equal to maturity period, less than, equal to maturity period, and less than maturity period. Make a note of this part, guys. Are we all clear, guys? Let's say your bond maturity is 8 years, duration is 5 years, reinvestment risk. पूरा 5 years का देखना है बेटा. You will want to exit from the bond at the end of 5th year. I will talk about that point. कि how will they offset. तुम लोग अभी उसके बारे में मत सोचो. As of now, your intention is just to understand better that there is price risk and then there is reinvestment risk. All right. Did you write all of this better? लिखो guys. खाना खाना शुरू कर दे. Write down better. Next. To avoid price risk and reinvestment risk. To avoid price risk and reinvestment risk. To avoid price risk and reinvestment risk. There are two possibilities. Avoid price risk and reinvestment risk. There are two possibilities. इसको क्या बोलते हैं बेटा? Interest immunization. When they say interest immunization, guys, it is immunization from interest rate changes. But they will not write the entire thing. Interest rate changes immunization. That is why the concept is still called as interest immunization. So basically, beta, you'll be protected from what? You're protected from interest rate changes. So the two possibilities are what, beta? अभी तुम्हारा को क्या बोला था? Possibility 1 क्या है? Look at this, guys. How can I avoid my price risk and reinvestment risk altogether? Perfect. Invest in a zero coupon bond for a period equal to its. Invest in a zero coupon bond, guys, for a period equal to its maturity period. For a period equal to its maturity period. That is possibility 1, guys. Possibility 2, guys. लिख सकते हैं, पढ़ा है मैं अभी थोड़ी देर पहले. Sleeping for 5-6 hours. Invest what, beta, in a coupon paying bond for a period equal to its duration. where price risk beta will exactly offset, price risk will offset reinvestment risk. You will invest in a bond, guys, for a period equal to its maturity period, where your price risk, guys, is exactly going to offset your reinvestment risk. Price risk will offset reinvestment risk. लिख लिए बेटा ये दोनों? Yes or no, guys? Now to understand this, guys, I'm going to take an example. Write down, guys, example. नहीं नहीं लिख 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 फोटो वोटो का कुछ है. बच्चों का नाश्ता भी हो गया पीछे लिखते लिखते. Yes, kids. हो गया सब. Example बेटा write down. Coupon rate 8%. गिर गया कोई वहीं पे? नहीं ना. हाँ. Coupon rate, guys, is 8% बेटा. Face value is 100 rupees. Maturity period is 6 years. Coupon rate 8%, guys. Maturity period is 6 years. Current YTM beta is 8%. Current YTM is 8%. YTM, guys, is equal to what? Coupon rate. If YTM is equal to coupon rate as such, guys, then your bond will be trading at YTM equals coupon rate. Bond will be trading at par. ये bond का duration 5 years है बेटा, that is why I took this example, but we will calculate that later. पहले we will just show that your price risk and reinvestment risk will offset. So your bond will be trading at par value, guys. Let us say beta we need 10,000 rupees after 5 years. What is the amount of investment to be made today? Can you all discount 10,000 rupees at 8% for 5 years, guys? What is the amount of investment to be made today? Present value as such beta will be 10,000 divided by 1.08 whole power 5. 6,805.83. Let us say, guys, we buy 68 bonds. वो थोड़ा बहुत approximation error आएगा because of that 5 rupees as such beta. 68 bonds, that means we'll invest how much? 6,800 rupees investment. You understood the question? I need 10,000 rupees after 5 years. So that is why beta I am investing 6,800 today, so that with the amount of income that I generate as such, guys, the amount will accumulate to 10,000 rupees in a span of 5 years. Why did I only pick up this bond? Because this bond we will later compute will have a duration of 5 years. Duration का जो concept है बेटा वो पढ़ाऊंगा बाद में, so that your price risk and reinvestment risk will exactly offset. Write the given details better, and then we will now compute accumulated balance in 3 cases. What if the interest rate remains at 8%? What if the interest rate increases? What if the interest rate reduces? In all the 3 cases, we will see better that our accumulated balance at the end of 5th year is exactly 10,000 rupees. It does not change. Basically, we're trying to protect against price risk and reinvestment risk. Copy the given details, guys. Then we'll show those calculations. लिख लिया already? सब लोग लिख लिया already? आराम से. हो गया बेटा ये? अरे कृषा तेरी ऐसी की तब से. So guys, we are supposed to compute what will be our accumulated balances at the end of fifth year, guys, if the amount of interest rates continues at 8% and say it increases to 10% or decreases to 6%. Can we all do that, guys? Now, if interest rate is such beta continues at 8%, guys, then what will happen, guys? Year 1, 2, 3, 4, 5. What is the cash flow that you will get in the first year, guys? How many bonds did you buy? 68 bonds. Each bond has a face value of 100. Total face value. Won't you get 6,800 into 8% coupon, guys? 544 rupees. 6,800 into 8% beta 544. Every year you will keep getting 544 rupees. Please understand, guys. एक second सुनो बेटा. At the end of fifth year, guys. At the end of fifth year, remaining maturity of the bond is how much? Remaining maturity is 1 year. I still have some amount of price risk, guys, because I am not holding the bond for 6 years. I'm holding the bond only for 5 years. But isn't your YTM equal to coupon rate beta in our case as of now? So bond will still be trading at, in the next two cases, bond will not be trading at par. यहाँ पे बेटा bond will still be trading at par value. If the bond is trading at par value, guys, how much will you get by selling the bonds? 6,800. 68 bonds of 100 rupees each, you're going to get 6,800. But I will have to compute accumulated balance, guys, by reinvesting cash flows at, you will have to reinvest all your cash flows at prevailing rate, and the prevailing rate beta is 8%. The amount that I've invested beta, first year cash flow, if I reinvest, that will be for how many years? 4 years. Next wala cash flow beta, that will be for 3 years. Next cash flow, 2 years. Next cash flow beta is for 1 year. Last wala beta, no reinvestment income, 7344. You will have to add up all of these values. Can someone tell me, guys, how much is the first, last second wala cash flow bolo? 544 into 1.08. 587 point, uske upar beta into 1.08 again. 630.52 into 1.08 into 1.08. 740 point. All of this put together बेटा. ऐसे देख के टोटल मत करो, कैलकुलेटर पे मारो, ऊपर से लेके नीचे देख के टोटल बोलने वाले ये लोग. 9,991 point, approximately 10,000, guys. Why are we still getting that difference of 10 rupees बेटा? स्टार्टिंग में 5 रुपए कम इन्वेस्ट किए थे, याद है? You were supposed to invest 6,805.83, but we invested only 6,800. That difference is resulting in this. यहाँ पे बेटा there is no interest rate changes only. शॉक मत हो जाओ कि 10,000 कैसे आ रहे मैजिक बोल के. Guys, did interest rates change? There is no price risk, there is no reinvestment risk at all as such beta. When will those risks come into picture? Only if interest rate change. यहाँ पे भी did not change the interest rate yet. It is constant at 8%. Are we clear? Copy this, guys. Semester 3 वालों 5 वालों जाना नहीं है एग्जाम लिखने. Ten more minutes. विधि और केशव, to show that the amount is 10,000. We wanted 10,000. We have 10,000 with us. If you do not end up with 10,000 rupees better, then why the hell did you make that investment? क्या डाउट आते हैं बेटा? ठीक है सर, ये सब क्यों कर रहे हैं? Guys, all of this is to prove, guys, that we have a total accumulated balance of 10,000 rupees by the end of 5th year. एंड तुम लोग कॉपी करना शुरू करो यार, तुम लोग हंसना। कृषा तेरा हो गया, केशव शुरू किया, आधा हो गया, कहते ईयर 1 लिखाऊंगा ये अभी। यस बेटा, चुड़ैलो हो गया। इट्स 8:40 गाइस, 45। కౌశిక్ వెళ్తావా? లేట్ అలౌ చేస్తారు కదా అక్కడ, తెలీదా? ఎగ్జామ్ 9:30 ఉంటే. హౌ మెనీ ఆఫ్ యూ గోయింగ్ ఫర్ సెమిస్టర్ 5 ఎగ్జామ్స్? బట్ సెమిస్టర్ 5 ఓన్లీ, నో? 1 2 3 4। क्या हो विधि? कौशिक को देखने का मौका चाहिए बस तेरे को, और सिर्फ कौशिक को देखी तू पलट के। यस गाइस, नाउ बेटा, are you all done with this? End of 5th year, remaining maturity 1 year, YTM is equal to coupon rate, bond will still be trading at par value. That is the sentence. Done? साउंड आ रही ना कुछ? बाहर से आ रही बेटा। हाँ हाँ, are we all done with this? Next beta, write down if prevailing interest rate, if prevailing interest rates beta reduces to 6%, reduces to 6%. Now do not forget beta, all reinvestments will be made at what rate? Smart guys, all reinvestments will be made at 6%. All reinvestments will be made at 6% guys. So if your reinvestments are being made at 6% guys, क्या और स्माइल करते जा रहा तू? Compute accumulated balance guys. Do not forget your cash flow every year beta will still remain at 544. Coupon amount that you're going to receive will not change. However, the price that you're realizing at the end of 5th year beta will change. अभी वो सुन लो बेटा एक second. Price at the end of 5th year guys, what do you think will be the price of each bond guys now? Remaining maturity is how much? Remaining maturity beta is 1 year. Shouldn't I discount cash flows beta based on that remaining maturity of 1 year? Yes or no guys? Won't the price beta be present value of coupon and redemption value for 1 year? Present value of coupon and redemption value. Discounted for how many years? Discounted for 1 year. ये समझ में आ रहा है नहीं आ रहा है? You will get 8 rupees, you will get 100 rupees, discount that at 6% beta. How much will be the price at the end of 5th year? You understood why am I discounting this? 6, कितना है बेटा price of each bond? Each bond 101.886 guys. So total beta for 68 bonds, how much will you get? अच्छा तो वो बोल रहा था 68 multiplied by 101.886 बेटा 6,928.30. Your reinvestment income is reducing guys, but that is getting offset by price increase. Are you not selling bonds at a higher price? Previous case में you sold bonds only for 6,800, but now beta we are getting 6,928.30. Are we clear about this? You will still have to compute accumulated balance, guys, but by reinvesting cash flows at what rate? Will my reinvestment income reduce? Please compute accumulated balance better and check if the accumulated balance is equal to 10,000. If your accumulated balance is 10,000 rupees, you are protected against interest rate changes. Though there was a change in interest rate, guys, our reinvestment income and price risk will offset each other. At the end of 5th year, remaining maturity is 1 more year, beta. We are computing price of the bond based on that 1 more year maturity and discounting cash flows at prevailing rate, which is 6%. So that 8 rupees and 100 rupees was discounted, beta, at 6%. Ye to, beta, is nowhere related. This we did in so many questions till now. Whenever you want to compute price of a bond, it is simply the present value of future cash flows discounted at the prevailing interest rates. Prevailing interest rate is 6%. We discounted future cash flows at 6%. Add all of these cash flows, better. 544 plus 6928.30, guys. How much is the amount? 7472.30. सब ऐड कर रहे हो 99,994 approximately 10,000. Our reinvestment income has reduced beta, but that has been offset by what? Price increase. Did you get this point? तेरा एग्जाम तो 2 बजे ना रे, तो क्या अभी प्रॉब्लम सॉल्विंग बुक निकाल रहा बाहर? अच्छा, तेरे जैसे है. Yes, guys. క్యాలిక్యులేటర్ ఉన్నాయి కదా రెండు, క్యాలిక్యులేటర్స్ ఉన్నాయి కదా రెండు, క్యాలిక్యులేటర్లు ఇంగ్లీష్ ఎగ్జామ్ కదా. Did you compute this? Did you all write this, guys? Make a note of this also, better. We are not done with the computation yet. We still have to solve it one more time, better, by reinvesting all of them at a higher rate. And then we'll write the conclusion. फोकस करना है ना बेटा, स्क्रीन देखने के लिए चश्मे पहनो. ये बोल के आंखों से करते, चश्मा आ गया तो भी कर दे. Where's your center? Going together only. She's riding. Yes. All the best, better. License వచ్చిందమ్మా. Yes, guys. Now the third case, beta, that is if prevailing interest rate, beta, increases to 10%. If you're all done with this, beta, next case, तुम्ही calculation शुरू कर दो. If prevailing interest rate increases to 10%. ये नहीं हुआ तेरा अभी तक? Your cash flows every year will still remain at 544 rupees, guys. That is not going to change. Consider interest rate to be 10%, guys. Now your reinvestment income will increase, but the price that you will fetch at the end of 5th year will reduce. Online students, I hope you're all solving better. इसीलिए ये बॉन्ड पहले लिया ताकि वो समझ में आना, फिर इसके बाद में ड्यूरेशन कैलकुलेट करेंगे सेम बॉन्ड का, वी विल गेट द आंसर एज 5 years. फॉर एनी अदर पीरियड इट विल नॉट, जैसे इफ यू आर इन्वेस्टिंग इन दिस बॉन्ड फॉर 4 years, you will not be protected against interest rate changes in this. Perfect. हो गया 10% पे आ गया, कितना accumulated balance? 997.53. हाँ चुप है. 997.534 is the accumulated balance beta that you have at the end of 5th year. आ गए घर वाले, आ गए. जाओ बेटा नाम रोशन करो. If interest rate beta increases to 10%, do not forget you have to recompute price of the bond guys at the end of 5th year. Your 1, 2, 3, 4, 5 guys. What are your cash flows beta in the first year? 544 next. 544, 544, 544 and then 544 guys, plus you will have to compute price. Price at the end of 5th year guys. Can I directly write beta 8 rupees plus 100 rupees divided by 1.1? First then 98.18, 98.1818 guys. Total value beta 68 bonds into this. एक second. हाँ 66,000 676.36. This will be the price that will prevail at the end of 5th year guys. You will now accumulate all the balances by reinvesting the cash flows beta at 10%. 544 into 1.1 whole power 4, 544 into 1.1 whole power 3, 1.1 whole power 2 into 1.1. How much will this be beta? 544 plus 6676.36. 7220.36. Total accumulated balance 997.5344. अरे तेरे से भी एक कदम आ गई. 997.53 beta is the total accumulated balance that we have guys. Did you all get this? If you're done with the calculation part beta, let me know, I'll give the conclusion. Ankit Ainda. Triple 97 guys, 0.53 is the total accumulated balance. Now, what are we trying to learn here beta is, irrespective of your interest rate changes, the total accumulated balance guys will remain at 10,000 rupees, which implies that our effective return guys will remain at, जरा केशव नॉर्मल, मैं भी जो बोल रहा हूँ थोड़ा ध्यान देना बेटा. तुम लोग जल्दी बैक करके जाओ बे. बैक पैक कैसे कर रहे हैं वो भी देख रहा भाई अभी. Irrespective of the interest rate changes guys, the accumulated balance is 10,000 rupees, implying that your effective return will remain at 8%. That is happening guys only because the duration of this bond is 8 years. We will compute that duration guys in some time. If we duration of this bond beta is 5 years. When I say 5 years as such guys, if you invest in this bond for a period of 5 years, only then you will be protected against interest rate changes and price risk and reinvestment risk. if you would have invested in this bond, guys, for a period of 4 years, you will not be protected against interest rate changes in this. जैसे यहाँ पे बेटा, say for example I sell off the bond at the end of 3rd year only, my effective yield will not remain at 8%. My effective yield is going to change. समझ में आ रहा है क्या बोल रहा हूँ? Your effective return will not remain at 8%, guys. That will, यहाँ पे बेटा, irrespective of the interest rate changes, isn't your effective return remaining at 8%? That is only because the duration of this bond is 5 years. When the interest rate is reducing to 6%, is that better? When the interest rate is reducing to 6%, where are you losing? Your reinvestment income is coming down. But what is giving you a benefit? Increase in price. That increase in price is getting offset, but the reduction in reinvestment income is getting offset by your price increase. Likewise, when your interest rate is increasing to 10%, guys, your reinvestment income is increasing, but the price of the bond is decreasing. Again, they will offset each other. Is that clear, guys? समझ में आ रहा है नहीं आ रहा है, guys? For this, there is a concept beta called as duration of a bond. Books ka definition of duration beta is, it is the time period required to recover the initial investment. The literal definition that is given anywhere as such beta says that it is the time period required to recover your initial investment. The actual definition of the word duration beta is, it is the time period for which if you remain invested in a bond, you will be protected against interest rate changes. You will be able to realize your original yield. इसका भी एक drawback है बेटा. I will explain that drawback after we finish the concept. जैसे duration does not work if interest rate changes more than once. It works only if interest rate changes once. जैसे first year में it is 9%, by the end of second year beta it becomes 8.5%, again it increases to 8.75. Duration will not hold good. You will have to keep revising your portfolio of bonds. Otherwise, you will not be able to effectively realize your return. Even this has been asked in the examination once. What will happen if the interest rate changes again? You will not be protected against interest rate risk unless you revise your portfolio of bonds. So, duration, guys, is that period for which if you remain invested in a bond, the value of that, you will be protected against interest rate changes. Abhi ye bond beta had a maturity of how many years? This bond had a maturity of 6 years. What was the coupon rate of this bond, guys? 8 rupees. Coupon rate was 8%. Every year you will get 8 rupees. At the end of 6th year beta, you will get 8 rupees plus 100. Originally, what was the yield beta? 8%. Can you tell me what are the present value factors at 8%? I want present value of cash inflows beta. More specifically, I want the present value of each and every cash flow beta here. 7.4074. Next, divided by 1.08. 6.8587. Divided by 1.08. 3506. Divided by 1.08. 88. Divided by 1.08. 5.446 divided by 1.08 into 108 by 8 into 108 by 8 किया ना 68.0583. These beta are the present value of cash inflows. ठीक है? To compute duration, guys, you multiply the year with the weight, which is the present value of cash inflow. 1 multiplied by this, 2 multiplied by this, 3 multiplied by this. Can you tell me what are the products now? 1 into 7.4074 beta is 7.4074. 2 multiplied by 6.8587 will be 13.7174. 3 multiplied by 6.3507 will be 4 multiplied by this beta will be 24. 5 into this beta will be 27.22. 6 multiplied by 68.0583. 408.3498. The sum total of present value of cash inflows will be 100 rupees only. Can you add up all of these values beta? Now X into W. X is the year, guys, and then weight of those cash flows. 499.2702. Duration of a bond beta is computed as summation xw divided by summation w. 499.2702 divided by 100 rupees, 4.9927 years. The duration of this bond is 4.9927 years. This is the only reason that our interest rate changes did not have any impact on the total yield realization. Duration का formula is given in ICI material is similar, but then they write like this: time period multiplied by coupon amount divided by 1 plus I whole power t. Isn't this present value of cash inflows? Yes or no, guys? ये सब याद रखने से अच्छा बेटा simply xw divided by w, where weight beta is the present value of cash inflows, x is the time period over which the cash flows are arising. The derivation of this beta is based on differentiation and integration. The whole objective is to arrive at that point on the graph as such beta where the accumulated balance does not change. The whole concept was given by a person called as Macaulay. That is why the name of the concept beta is Macaulay duration. Exam में will they ask computation of duration? Yes. सबसे favorite question उनका यही है. The concept of duration, modified duration, convexity, very common in the examination. So duration is such beta. So if you invest in this bond for a period equal to how much? 4.9927 years, you will be protected against interest rate changes. The duration of a coupon paying bond will always be less than its maturity period. If you invest in a coupon paying bond for a period equal to its maturity period, common sense lagao. There is no price risk, but you still have. How the hell will you offset them? We are able to offset each other, guys, only if both the risks are present. What do you think will be the duration of a zero coupon bond? Maturity period. Directly equal to maturity period. Because the only way you protect yourself against price risk and reinvestment risk is by investing in a zero coupon bond for a period equal to its maturity period. Kuch bhi kar lo beta, the duration of a zero coupon bond is always equal to its maturity period. If you invest in a zero coupon bond for a period lesser than that, there is no reinvestment risk, but you still have price risk. You will not be able to offset each other. समझ में आ रहा है नहीं आ रहा है? Yes or no, guys? ICI में बेटा अभी फॉर्मूला और है, सिर्फ ऐसे खत्म नहीं होता. Time period into coupon divided by 1 plus I whole power t plus nth year, that is redemption n beta, into redemption value plus 1 plus I whole power n whole divided by as such, guys, the summation of the weights, that is nothing but the price of the bond today. ये फॉर्मूला याद रखने के लिए वापस वो रहता बेटा. This is same concept. Coupon divided by 1 plus I whole power t is the present value of cash flows. Redemption value divided by 1 plus I whole power n is still the present value of redemption value. Weights are present value of redemption values. The sum total of all of those present value of cash inflows, won't that be equal to price of the bond today? इसीलिए एग्जाम के लिए directly you can write beta xw divided by w, where x is what beta? The year in which cash flow is arising. What is w here? Weight, which is present value of cash inflows. You just have to present a table like this beta. You know what are your weights, multiply them by the year in which the cash flow is arising and you will get the answer. Are we, guys, what I'm trying to tell you बेटा, वो बाद में जब रिवाइज करते हैं ना अपन, आदत रहती स्टडी मटेरियल खोल के we start बोल के, and then sir you taught a different formula in class, the formula is different here. Formulas are not different, guys, the way we are writing it is different. The formula is exactly same. वहाँ पे there are too many variables that you will have to remember better and write. उससे अच्छा directly remember that it is year in which the cash flow is arising multiplied by the present value of cash inflow. Formula कुछ भी अलग नहीं है, आंसर अलग आ ही नहीं सकता है. If अगर आंसर अलग आ रहा समझो, then there is a problem. The formula is exactly the same, but you can directly write that as summation xw divided by summation w. So again, guys, what are we trying to learn here is interest immunization. Investing in bond has two major risks: price risk and reinvestment risk. What are the two possibilities that I made you write? Either invest in a zero coupon bond for a period directly equal to its maturity period, or if you would want to invest in a coupon paying bond, it should be for a period equal to its maturity or equal to its duration. So duration is that time period beta wherein if you remain invested in a bond, you will be protected against interest rate changes. Price risk will exactly get offset by reinvestment risk. This is why I had to take the example of this bond. Every batch I take the same example because of perfect 5 years ana beta. If I get 4.234 years guys, it will be difficult to show the calculation again. So this bond beta has a perfect duration of 5 years. So using this we proved beta that the total accumulated balance is remaining constant. Next time if someone is asking you what is duration as such beta, you should not simply say that it is a time period over which we will realize our investment. It is the time period over which price risk will get offset by reinvestment risk. And 101% any investment banking job, any normal banking beta, your treasury department or anything, they will ask this. The VP of a bank as such beta, when he took interview of me, एक घंटा चला था वो. We had discussion over duration, modified duration for 30 minutes as to how the concept works as such beta, कि how practically it works. वो सब चीजें will matter a lot there. All right, चलो guys, let us write down. कहाँ पे स्टॉप किए थे अपन? डिड वी राइट ऑल द एक्यूमुलेटेड बैलेंसेस? यहाँ तक हो गया है ना ये? ना उसके नीचे लिखो बेटा. अगर बाद में, अभी वो पूरे ड्रॉबैक्स लिखूंगा मैं, हाँ, क्योंकि अगर बाद में आ रहा है ना तो क्या हो रहा है, फॉर 1-2 years री इन्वेस्टमेंट इज बीइंग मेड एट अ डिफरेंट रेट, फॉर अनदर ईयर री इन्वेस्टमेंट इज बीइंग मेड एट अ डिफरेंट ईयर. So I'll make you write all of those drawbacks. If interest rate changes subsequently also, there's a problem. हाँ. The objective is to compute weighted average time period beta over which we are going to realize the initial amount of investment. The actual derivation again is based on differentiation, not directly this. Basically beta जब graph पे तुम लोग लिखोगे, you will have a graph for reinvestment income, you will have a graph for price of the bond over the maturity period, you will have a combined graph of reinvestment income and price. You are trying to find that spot on the graph where the accumulated balance will remain at 1000 rupees, जो भी अपना amount है. That becomes the duration of. अगर actual derivation जाना है बेटा, वो advanced mathematics तुम्हारे समझ में आ रहा है क्या बोल रहा हूँ? You will have a graph as such beta for reinvestment income at different rates. You will have a graph as such beta for price of a bond as such guys at different rates. You are in search of that point on the combined graph as such guys wherein the total amount is equal to the accumulated balance irrespective of the maturity. जो भी वो रहने दो बेटा, the amount should be equal to it. That particular point as such beta will become your duration of the bond. That is how they derived it, nothing else. Is that clear? अभी क्या बेटा क्या लिख रहे थे? हाँ, write down. ग्राफ से ग्राफ का स्लोप निकालना ना बेटा. Wherever there is graph, there is differentiation. What is differentiation? Trying to find the slope of a curve at a specific point. This is why guys, even in MBA finance courses, do you know what's the refresher course that they teach you? Differentiation and integration. They send out links to you guys before your MBA finance starts, telling you कि थोड़ा revise करके आ जाओ बंदो, वरना बाद में problem होगा बोल के. I'm not kidding guys. Refresher course में they teach differentiation and integration in every MBA finance course. अलग बात है बेटा that we do not apply it, forget it बोलते. वहाँ पे भी जाके क्या बोलते? Formula बोल भाई तू, तेरे को आंसर बोलता हूँ मैं क्या है. Anyway, let down. In all the above cases, in all the above cases, in all the above cases, the accumulated balance is remaining at 10,000. The accumulated balance is remaining at 10,000. The accumulated balance is remaining at 10,000. Accumulated balance is remaining at 10,000. 10,000. Irrespective of the changes in interest rates. Irrespective of the changes in interest rates. Irrespective of the changes in interest rates. Which implies the effective yield remains at 8%. Which implies the effective yield remains at 8%. The effective yield remains at 8%. The effective yield remains at 8%. Next line. When the interest rate decreased to 6%, when the interest rate decreased to 6%, decreased to 6%, the reduction in reinvestment income, the reduction in reinvestment income, the reduction in reinvestment income was offset by, reduction in reinvestment income was offset by, reduction in reinvestment income was offset by, what beta? Increase in price. Reduction in reinvestment income was offset by increase in price. Similarly, when interest rate rates increased to 10%, the decrease in price was offset by, the decrease in price was offset by, decrease in price was offset by increase in reinvestment income, increase in reinvestment income. The duration of the above bond, the duration of the above bond, the duration of the above bond is 5 years. Duration of the above bond is 5 years. Is 5 years. And hence, we are protected from, and hence we are protected from interest rate changes. And hence you're protected from interest rate changes. If the investment period, if the investment period, if the investment period was less or more than 5 years, was less or more than 5 years, was less or more than 5 years, less or more than 5 years, interest rate changes will have an impact on yield. Interest rate changes will have an impact on yield. Interest rate changes will have an impact on yield. Will have an impact on yield. ठीक है. Next बेटा side heading duration. Side heading बेटा duration. Duration. It is a time period. It is a time period. It is a time period. Time period over which. Time period over which. Over which the original yield will be realized. Original yield will be realized. Original yield will be realized. The price risk and reinvestment risk will offset each other. The price risk and reinvestment risk will offset each other. Price risk and reinvestment risk will offset each other. Next line. The duration of a zero coupon bond. The duration of a zero coupon bond. The duration of a zero coupon bond will always be equal to its maturity period. Will always be equal to its maturity period. Will always be equal to its maturity period. Brackets में बेटा, as there will be no price risk and reinvestment risk. As there will be no price risk and reinvestment risk. As there will be no price risk and reinvestment risk. No price risk and reinvestment risk. Next, better. Next line. The duration of a coupon paying bond. The duration of a coupon paying bond. Duration of a coupon paying bond will always be less than its maturity period. Will always be less than its maturity period. Brackets में बेटा, both price and reinvestment risks exist. Both price and reinvestment risk exist. Both price and reinvestment risk exist, but they offset each other. Both price and reinvestment risk exist, but they offset each other. But they offset each other. Next, better. Duration equals summation xw divided by summation w. X is the year in which cash flow arises. W beta is weight, which is the present value of cash inflow. Present value of cash inflow. Do not forget, beta, summation of weights will be equal to what? Price of the bond. Summation of weights will be equal to price of the bond. As per ICAI, beta, same formula वो लिखा रहा हूँ बस, books में करने की जरूरत नहीं है. They will give full marks even if you directly write xw by w. Summation t into whatever is your coupon divided by 1 plus I whole power t plus n into redemption value plus 1 plus I whole power n whole divided by price of the bond. It is still the same as multiplying the year beta with the present value of cash inflow. लिखे बेटा ये. Now guys, write this. This is for the same bond, guys. Yes, kids. लिखे बेटा पूरा ये 499.2702 guys divided by 100 rupees, that becomes 4.9927 years. You write duration beta in terms of number of years. We are trying to compute time period over which we should remain invested. Time period is a variable here. So 4.9927 years is the time period over which we should remain invested in this bond. Are we clear about this? Yes or no beta? 4.9927 years. Any doubt in this? Chalo guys, let's end the session. 1 second, but if there's any homework question that I can give. Janito, we'll do it in the class tomorrow. Online students, end of the session guys. No homework questions. See you guys tomorrow. Bye bye.